Hey everyone, welcome back to Property with Premier Buyers. If you are new to the channel, please hit like, subscribe, and hit the notification bell. It will help us keep creating new content for you. Today, we are diving into a hot topic for 2024. Should you buy an investment property this year? If you are considering stepping into the property market, you are in the right place. We will break down everything you need to know about the current property landscape, supply and demand, interest rates, and more. Let's get started. First up, investing in property is a big decision. Real estate is a long-term play. You're looking at it not just for quick returns, but for its potential to grow over time. But what's the state of the market in 2024? Let's explore some key factors. One of the most crucial factors in property investment is balance between supply and demand. If there is too much supply, prices can soften. On the flip side, when supply is tight, prices tend to rise. In August 2023, the National Cabinet aimed to deliver 1.2 million new homes over the next 5 years, starting June 2024. That's 240,000 new homes annually, or 60,000 per quarter. But here is the catch. Despite some high approval numbers, actual completions have never hit those targets for decades. In this graph, the orange line represents how many dwellings we need every 3 months, and the blue line represents how many dwellings that have been actually delivered. No wonder why prices keep going up, right? Meanwhile, population growth has surged since COVID-19 downturn. So with a slowing rate of new dwellings and growing population, the housing shortage is likely to continue. According to the National Housing Finance and Investment Corporation, wow, that was a mouthful, the housing shortage is expected to persist at least until 2029, creating ongoing challenges for potential home buyers. Even if supply begins to catch up, it will take several years to address the accumulated undersupply. The construction industry is also feeling the strain. Insolvencies are up, particularly in the construction industry, which isn't helping the case with supply issues. Another factor is household size. It's been decreasing over the years, from 2.9 people per household in 1983 to 2.5 today. It doesn't look much, right? This seemingly small shift actually means a need for an extra 1.5 million dwellings due to our growing population of around 27 million today. The reduction in household size from 2016 to 2023 alone requires 300,000 new roofs. Now let's talk about our favorite topic in every household: interest rates. Historically, lower rates make loans more affordable and drove property prices up. Even with higher rates, property prices have continued to rise. Recently, several lenders have cut both fixed and variable rates. For example, the Commonwealth Bank of Australia reduced fixed rates by up to 0.7 percentage points. These rate cuts align with the major banks' forecast for future rate trend. Lower interest rates generally boost affordability, meaning property prices are unlikely to slow down. Based on the latest quarterly GDP figures published by ABS, Australia's GDP grew by only 0.2% in June quarter. This is not impressive, especially considering the population increase. However, the unemployment rate is quite low. Although it has been gradually increasing since the last quarter of 2023, it's still below RBA's full employment threshold of 4.25 to 4.5%. In the latest financial results published by Commonwealth Bank of Australia, it reported that whilst there has been slight uptick in arrears, overall home loan resilience is quite strong, with more customers ahead on loan repayments, higher offset balances, higher withdrawal balances, and 90-day plus arrears at historic average levels. There is a correlation between consumer sentiments and house prices as well. And hear me out. We saw a big dip in consumer sentiment during GFC and COVID times. Property prices have rebounded following those periods of low confidence. After hitting historic lows, consumer sentiment is on the mend, particularly with anticipated rate cuts easing cost pressures. Now, time will tell how much of an impact RBA Governor Michelle Bullock's most recent comments on people being forced to sell houses will make. So what does that all mean for you as an investor? Whilst the best time to buy investment property might have been years ago, 2024 still offers promising opportunities due to ongoing supply-demand imbalance, favorite interest rates outlook, and economic stability. Thanks for watching. Don't forget to like, subscribe, and hit that notification bell for more updates. See you all next time.